quickly in the broadcast with me to discuss all of these things. We've actually got Philstocks' Japhet Tantiangco to join me this morning.
Hello, Danny. Thank you for having me.
Hi, Japhet. So it's so good to see you. Now, there's so many things going on in the markets, despite all of the health issues as well. There's still a lot of active stocks here to be watching out for. Now, I just want to take a very quick step back, because markets seem to be breathing a temporary sigh of relief here after 5 straight weeks in the red. Um, Tell us, what is the sentiment right now? You've got 5 straight weeks in the red, record daily new cases of the virus, a reimposed lockdown, but that might be lifted na. A GDP slump, worse than expected. It can't get any worse. Is this going to be the week where you should be positioning na?
You can. There are select sectors that we can choose from. The defensive sectors, we can go there. Primarily the consumer retail, as well as the telecommunication sectors and even the utility sectors. These are the ones which we think are resilient, strong enough to withstand the current situation in the economy. But if you're going to look at the market in general, we're still seeing a bearish bias. Uh, for this week, yes, we are posting gains, but it's under low value turnover. Trading is still tepid with our average value turnover for the week so far at just 5 billion. This a little less than 5 billion, which is below the year-to-date average of more than 6 billion. So this means that there are still a lot of investors that are staying on the sidelines, waiting for the clouds to dissipate. And given at the same time, there's still a lot of uncertainties moving. As mentioned, there are a lot of uncertainties moving forward. Yes, many are looking towards the lifting of the
Mm-hmm.
stringent quarantine measures in selected areas in Luzon. But the question now is, well, what happens after that? Investors are still looking towards how the pandemic situation in the country is going to be managed. I think that's where they are taking their main cues from to invest in the market.
Japhet, can you explain the market reaction to the GDP print? It was much, much worse than what analysts had expected, but actually, in that day, it seemed to have been brushed off. Some analysts have said that they are already pricing it in. What is your outlook now? Do you, because the central bank governor has recently said that that is going to be a one-off. The worst is already over. It's going to be a very sharp recovery after that. Is that what you feel as well? Are you revising your GDP, not necessarily targets, but outlook? And do you feel that there's going to be a longer, something way worse than the Asian financial crisis that might be happening in terms of recovery? Or are you on the camp of the government that says that this is already done?
Okay, well, first with the reaction of the investors, the GDP print, yes, it was worse than expected, but it didn't have much of an impact on the market on the day it was released, and this is because it has already been priced in. I think this has already been included in what investors were pricing in during the precipitous slide in the middle of March 2020. So now investors are looking towards what's going to happen with our economy for the rest of the year. On our side, in our mid-year briefing, we gave a forecast for GDP for 2020. It's going to be a contraction of 5.8% for the whole year.
Mm-hmm.
Unfortunately, that was under the condition that second quarter GDP would slump only by 14% year on year. It turns out that the contraction that came out it's worse than expected. So we will have to revise our projection. At the same time, you had the MECQ, which was implemented in the third quarter of 2020 in selected areas in Luzon, including the National Capital Region, which contributes 36% to the overall economy. So we still have a lot of revisions to do. But one thing is for sure, it's going to be deeper than our previous one, which is 5.8%. Unless there's going to be
Okay.
changes, positive changes towards the end of the year. Now, with respect to the recovery story, we're seeing a gradual recovery for the economy. It's not going to be a quick one because the damage has already been done. Because of the stringent lockdowns that have been implemented, we have lost a lot of jobs. And those
Mm-hmm.
jobs that we've lost, it's something that we won't be able to get overnight. Even let's say there, a vaccine is already there, it's businesses will still have to build their base, their respective investment base. It's going to take a long period of time before we get to regain all of the
Mm-hmm.
jobs that we lost, which in turn is where the economy is in Japan. So in our view, this is going to be a gradual recovery for the economy.
Okay, so it's actually worse than what the government has projected, and also there's a lot
Mm.
of downside risk still. Can we talk about consumption? Just taking a quick peek, or just digesting the second quarter earnings and what that
Mm.
means for consumption. So during the period that we were easing the restrictions, did you feel that the consumption ticked up? As expected, more than expected, less than expected, and also given that the loan growth, it's a bit mixed. So a report today is that the MSE's got more money, but at the same time, the M3 liquidity is not necessarily that much, diba? Despite the fact that there's so
Mm.
much easing. So what is the consumption story here? Is that really going to be as good as we're hoping will be recovering, especially as the lockdown is now going to be eased, if it does?
With respect to consumption, it's similar with the general economy. It's going to be a gradual recovery for consumption. Yes, we're seeing improvements right now, but it's mostly because of the way we see it. Consumption is still going to be mostly on essentials. That's what consumers are going to. Of course, that's what consumers are going to buy first in this time of the pandemic. At the same time, again, we look at our unemployment figures. Looking at our unemployment figures, it's still high, and we still have a lot of job losses. A lot of job losses is commensurate to a lot of disposable incomes lost. So, given these challenging times with respect to consumption, it's still going to be focused on the essentials. We may only see a rise in the consumption of non-essential goods once we are able to regain our previous employment figures.
Okay, let's talk about some specific stocks here. Let's kick off with GMA buying back their deposit receipts from the foreign
Mm.
holders. What does this move tell you about the fear or the risk of regulatory risks, especially given that the ABS-CBN was recently shut down. This stock has been soaring because of that shutdown. But is there actually a risk that investors might be feeling that it might have the same fate as ABS-CBN?
Well, to be honest, the PDR is a blurry topic. But GMA's move yesterday, I believe this is because of a change in perception with respect to the Philippine depository receipts. Because first, what we thought of was PDRs, were instruments that gives one the right. It gives the holder the right to claim for ownership. It gives the right, but it's not a representative of ownership itself. So that was our initial view of what PDRs were. That I believe that's also the reason why GMA and ABS-CBN used it to raise capital with foreign investors. But then, as mentioned, the hearing with the ABS-CBN's franchise renewal happened, and based on the findings and the recommendations of the technical working group, which was adopted by the House Committee on Legislative Franchises, that PDRs raise issue on ownership, foreign
Mm-hmm.
ownership, with respect to companies which should be 100% owned by Filipinos. So GMA's move yesterday, I believe, again, I believe this is based on the changing perception with the PDR. And yes, as mentioned, I believe this is a move which they're trying to do, a preemptive measure which they're trying to do in order to avoid the regulatory risks, specifically the risk that could come out, the issues that could come out now that the committee is pushing for investigations with respect to the said Philippine depository receipts.
Do you think that there's a fundamental reason for the rally of GMA? Was that all sentiment driven, or are you actually fundamentally banking on this stock? Is there still some upside to go?
With respect to GMA, of course, given that ABS-CBN is now its main competitor, which is ABS-CBN, is heavily damaged because of the franchise, because of the non-renewal of its franchise. This is something that GMA can bank on. This is something that GMA can capitalize on. And if it could harness the opportunities that could come out of the current situation, then yes, its rally is something that is backed by fundament that I mean its rally can be justified by the fundamentals, the possible improvement in its fundamentals as it banks on the current situation wherein its main competitor has been heavily damaged by the franchise non-renewal of the franchise.
Okay, so it's not just excitement. There's actually an
Yep,
opportunity for them to
there's an
capture
opportunity.
a market. There's an opportunity. Let's close with telcos before we end with broad markets here. Again, a lot of excitement because of the faster process of the LGUs to now do the permits for the towers. This was something that President Duterte called.
Yep.
Which one would this benefit? Why was it that the third telco player, Dito Telecom, was the one that had surged amid this new news? And not necessarily the incumbents. Is there any reason for that?
Well, it's because I believe that for Dito Telecommunity, their investors are expecting a lot, given that this one is going to shake up the competition. It's going to shake up the competition in the telecommunication space. Plus, as mentioned, you have the ongoing narratives for the said sector. You have the common tower policy. You have the government being directed to help the telecommunication firms in ramping up their network expansion through the towers. At the same time, there are a lot of opportunities given that the economy is moving towards the digital space. You have education is about to start, and people are and it's moving towards online learning. You have a lot of businesses doing their digital transformation. So a lot of opportunities right now for the telecommunication sector. And as for Dito, given that it's just going to be a new entrant in the market, so there's a lot of excitement with it, and this is what investors are pricing in, and this explains its rally yesterday.
But do you think they're actually going to be capable, given the MECQ, given the difficulties in rolling out networks right now with the situation, are they able to meet their commitments?
That's a problem that we see. Well, according to Dito, they'll be able to meet their commitments. But judging from what we're seeing right now, yes, with the quarantine measures that have been imposed, there will be hardships with respect to the rollout of the network.
And finally, just before we close on the index, have you seen it to be resilient? Actually, we haven't gone below 5,800. What's your outlook for this week, short term?
Okay. Well, for the index, yes, somehow it has shown resilience. The actually our trading range for the PSEI right now is from it has a support at 5,700 and a resistance range of 6,000 to 6,100. And so far, the 5,700 support level was able to hold. So this shows the strength of the market. That some way somehow there is still some optimism left. Now, another good thing with the market is it was able to breach, just yesterday, it was able to breach its 10-day exponential moving average.
Hmm.
So that's what we're looking into right now. If it will be able to sustain its ground above that dynamic resistance line. If it would be able to do so, then it would have a better chance of striking the 6,000 to 6,100 resistance range. However, if it does not hold, if the ground above 10-day exponential moving average does not hold, then there's a possibility that this could go back to and test its 5,700 support.
Okay, so we have around 24 points to go before we go back to those 6,000 levels. Thank you so much for those insights. That was Japhet Tantiangco of Philstocks.
Very much welcome, Dan.